Vincenzo's Go Crypto Investing this November the 13th, 2025, almost approaching mid-November now, rounding our way through the first half of November, if you can believe this already. And some big news that has happened. The government shutdown seems to be officially over. Trump and the Trump administration, while trying to beat down interest rates, which he will, short-term rates are still, I think, 3.75 to 4. He'll get it down to 1.5%. He's introduced breaking legislation of a 50-year mortgage. And we're going to talk about how that negatively affects you, a consumer, and trying to become an asset millionaire when you're paying interest on something for 50 years. It's bad enough at 30 or 20 or 15 or even 10, but 10's manageable because not everybody has two, three, four, $500,000 to buy a house cash. But if you're only doing it for 10 years or less, it's manageable. It's not bad. But a 50-year mortgage is catastrophic, and it's another horrible decision by the United States government. This time, President Trump is the one initiating this law. And it just continues to reaffirm asset inflation at all costs. They would rather have you pay, we'll show you the interest later, an extra $500,000 in interest versus having home prices come down, right? Because they want constant asset inflation. And depending on what asset it is, it constantly, over time, repeatedly over 30-year stretches, will be higher than it was when you bought it 30 years ago, like a home or gold bullion, right? Or silver or oil or copper or nickel, right? Commodities. Home's a commodity, and stocks are an asset. It's not a commodity, but homes are a commodity. So if we look at the Bitcoin price, we'll see what's going on here. And the Bitcoin price is bouncing sideways after it come off the low from I think about a week ago when we were sitting down here. Yeah, Wednesday of last week, we were bouncing just above the 95,000. Then we had the little hook reversal. I still believe it's coming down to 95,000, but it doesn't usually do it in a straight. It's going to trade. It might even come back up before it comes down. But I think we're coming down, and we have a date with 95,662, and then that's the 50-day moving average, which we actually in the weekly time frame we actually have to update these. It's been a few weeks. Has it been that long? Yeah, wow, these have come way up. Or the prices come way down, or the combination. So the weekly time frame moving average we're actually on right now. Unlock. We have to remove that. It's actually up here, so we are wicking on it now. Updating the moving averages. We'll go to the 50-day, the 100-day moving average. We'll unlock that, and we'll move that. And then we'll move down to the 200-day. I should do these in all of these because we've been looking at bad information because I haven't updated them. And you can see that now it's sitting on the 50-day moving average in the weekly time frame just below, and it's starting to get squeezed now, which is interesting because this will be the first time we've seen this in a while. And could this be what's playing out? What you see in the track here, where this is going to get squeezed between an overhead daily and an uptrending weekly time frame moving average, and eventually that squeeze out performs a breakout, and that breakout, would that be to the upside or the downside, right? So it's going to be very interesting over the next several weeks. But you can see right now we are sitting, if we zoom in to the daily, we're sitting on the 50-day moving average right now. So this is key critical time because if we break that, we're coming down to the 100-day moving average and the weekly time frame of $85,000, right? So that's getting better for micro strategies because that's coming up off of his average price is at 74,000, but a lot of the newer ones that have adopted the Bitcoin quasi treasuries and sacrificed in mortgage and bet and put their companies on the line that Bitcoin will only go up, they started doing this about where the price is now at $100,000, right? So this is very interesting. And if you break this 95,000, or this new price, which is actually, come on, come on, which is actually 100,000. If you break that, you're coming down to the 100-day moving average at 85,000 and change. If you want to revert that, you got to try to hold this 50 and then start to reclaim these overhead falling daily moving averages where you had a bearish cross. You're about, see, there's the bearish cross where the short term got underneath the medium term. You're going to have a golden bearish cross where the short term here is going to get underneath the long term moving average, but that's not going to happen for another 3 to 5 days that I'm forecasting. So this is very interesting, but I think I am calling them. We're going on board in the short term here that the next major move. with some jocking up and down. Doesn't mean it can't go from 100 where it's at now all the way back to 109 first. I think the next major move is coming to 85,000. Does that mean it's going to be right now? But that's just what I believe right now. If we look at the uh Ethereum price, you can see we've had that bearish cross officially minted. You can see it's just below right there by a couple of dollars below where the 50 is now below the 100-day moving average. You can see the 200-day is running parallel to slightly down. The price action did get rejected onto 35.93 like we talked about yesterday. And then like we talked about yesterday when I was jockeying for position the last 2 to 3 days, right? We were jockeying. We were trying to make up our mind sitting on top of that green support and resistance zone just below the 35.93 200-day moving average. And then we couldn't hold. And like we said, if it didn't hold, it would come down. Now some more jockeying is going to go on. And if it doesn't reestablish pretty quickly over top of the 34.74, the top part of this green support and resistance box, it's coming straight down to our wick low at the bottom part of this trading zone, sitting here at $3,068 and change. And you can see we had that circled over there. We'll just pull that over here. See that? We'll actually tighten that up there. But this is, I believe, where we're going, the 3,058 and change down near the bottom part of that support and resistance box. Let's get rid of that. We forgot to hit the button. If you don't want to go down there, the bullish way and the way on the other sense, bullish means go up. You have to get back up here. Get them some support on 34.74, the top part of this green support and resistance box, and then start meandering your way up. Get up over that 3,593 in green, which is the 200-day. Meander your way back up, and then get above the 50-day and the 100-day, which are there in red and green at 38.69, and then slowly get up above the 41.07 to where you're sitting on top of the $4,107 and change. And then that could be how you break and start to turn short-term bullish, and you're really looking healthy. All right, contrary 3,053. And then if you break that, there's nothing in between there and air until you get to $3,473 and change. If you look at the XLM price, you can see it's the same thing. We got to update these weekly time frame moving averages, though. Let's first update the daily, and you can see in the daily, you've been overhead rejected, where you're sitting down there, where you had the golden bearish cross. You're about to have where the super golden bearish cross, where the 50's on the bottom, the 100's in the middle. 0.315 for 50's on the bottom. Excuse me, work 200 on top and the hundreds in the middle, right? Short, medium, and long term. That means signifies simply a extended period of downturn, right? So you can see that. Now let's readjust these moving averages for the weekly time frame. Ooh, this one's actually coming down because the price action's been coming down. So they are unlocked on this one. We'll move it down. You can see we're getting rejected now on the 50, and then we shot all the way down. The 200-day or the 100-day and the weekly has come up slightly, and the 200-day has continued to trend up. And you can see now if we reevaluate where we're at, you can see there's our green support and resistance box. We'll pull that out to go longer into the future because the most recent past has now passed us, right? And the current has become the past, and we're going to lock that. And then we're going to simply get back into and talk about what's took place there. And you can see what simply took place is when we said talking about during this whole consolidation after this big wick right here, this big old wick down. See that big wick right there? See it? Look how long it is. I got to zoom out. When we had that big wick, the big flush, the big dump, the 63% and mass liquidation right there, and it bounced back and stabilized right after, and the price action was sitting along the 50-day moving average in the weekly time frame and this green support and resistance box that's just above it. We were saying if you didn't hold that, and over the course of about 10 to 15 days, you did not hold it, we told you it would come back down to the 26 the 100-day moving average in the weekly time frame, and you can see it did that. When it finally broke it, it came all the way down on the wicks, didn't hit it on the full candle body sitting. It reversed before the daily closes, came back up to upper resistance right here at the 50 overhead. Now it's resistance because you're below it. Anytime you're below something, it's resistance. Anytime you're coming down at something, it's support, right? You would expect a bounce. So this was a technical where we would expect a resistance. It doesn't always do it. That's the tricky part. Just when you are so confident that it's going to do it, it doesn't do it, and then it comes back up and actually goes up another 3 to 6% before it comes back down. If it comes back down, this is just putting probabilities in your favor, like counting cards on the blackjack table, right? That's as simply, and all its technicals are. You're a blackjack counter. You're at the table and you're trying to swing the odds into your favor when you make your bet. That's all you're trying to do. It doesn't always work, but it enhances your odds and enhances your probabilities of winning, right? So then it's coming down now, and like we've been talking about, if it comes down and starts to retouch this on the daily, which I think it's going to do, you will have some bouncing up from there, but I don't think it's going to be able to hold it, and it might be setting the stage to come all the way down to the 21 cents or the 200-day moving average in the weekly time frame in XLM. If you want to avert that and start to get bullish, you have to start sneaking your way up, getting over this 50, sneaking your way up over the 50-day moving average in the daily, then getting up over the 200 and the 100 and holding the 200. And then that's how you can work your way up and start to get bullish in the short term. But it's a lot of work. There's a lot of overhead resistance that's in the way. And I'm forecasting it to continue to go down. And I think we are coming down over the next couple of months in an up and down, jagged fashion to the 200-day moving average. In the weekly, the same thing is going to be with the XRP. And if we zoom into the XRP, we're going to start with the dailies. And again, you can see we had our bearish cross where the 50 got below the 100-day moving average, right? In the daily time frame. And then we got all the way to November 7th. We had the golden bearish cross where the 50 has gotten below the long term of the 200-day moving average. The 200-day is just above it, running slightly down but more parallel, and the 100-day is above that, running even more down. And eventually, if you extrapolate this out 3 to 7 days, if the price stays down, the 100's going to do this, the 200's going to do this, right? And you're going to have a bearish cross because this is going to be the 200, and it's going to cross it in 3 to 6 days if you don't get a reversal in the price action. There's a little bit of a forecast, but you can see now you got rejected off the 50-day at 254 and that horizontal in red, something that we were watching to see if it would happen, and it did happen. And now what's going on is you're coming down, and if you come down to the 233 again, you're going to get a bounce, at least a slight bounce somewhere in here, or you should, right? Um, and then if something seriously doesn't change there, you're going to slip that and you're going to come all the way down to the 100-day moving average in the weekly time frame. And we got to move these weekly time frame moving averages and see where they're at right now. The weekly time frame, you can see the 200-day was slightly up from where it was. The 50 days where it was, and the 200-day is slightly up. So this is very, very critical because this is where you're going to come down to on your next move is $1.87 if you can't hold this 233 50-day moving average in the weekly time frame. So this is very critical, and this is very interesting to see how this plays out. I just need the time check. We got to get this moving along over the next several days to several weeks. If you want to get bullish, it's the same kind of thing. You got to stay above the 50-day moving average in the weekly. You got to try to get above the 255 and start taking out these overhead daily time frame moving averages, running from the 50 at 254 to 258 to the 100-day moving average on top at 263, right? So that's very critical, very interesting. AMP is still trading down and tried to have a little rally there. It got rejected again by none other than the 50-day moving average. You can see, come on, get off that. The 50-day moving average right there rejected it again, and initially got rejected 2 days ago and yesterday early on by the overhead 100-day moving average. So still, it's very bearish. It could be a painful couple of months, but I'm still holding out hope, and I still do believe next year is going to be a big year for not only AMP but the DGB. And you can see right here the DGB after the 100% pump, something we're seeing if AMP can do. You're trying to hold and stay above the 0.00838. If you can do that, that's how you could pick to the upside. But if you can't hold this critical area, you're going to come back all the way down to 0.0006 and change, right? So it's something that we're going to watch out for. And something that we alluded on to in the beginning was the 50-year mortgage. And of course, it came off. So sorry about that. It, of course, came off right as I had it. So currently averaging a 30-year fix at 6.22%. For a 50-year fix, since it's a longer loan, on common higher rate of 6.8, so they're going to have a higher rate for that, so you're going to get even more screwed. I think it's a horrible idea. It's all about not having assets come down and trying to meet monthly payments, because the average poor person and the average American in the middle class that isn't financially literate think that it's all about, can I afford the payment? It's not about the payment, it's about the interest attached to that payment and how much you're going to pay in interest over the long haul, over the duration of the loan, because that is you being fleeced, right? And that's why throughout history, uh, countries that were Christian based, Catholic, or religious at all, even Arabic nations, it was against their religion to charge interest, because they knew that when you charge interest, the person charging the interest ends up owning over the long haul everything from the people that are paying the interest, right? It's theft, and it was illegal, and it's just horrible, right? And so they're fleecing people because the average American doesn't have a good financial education, and that's what we're here to help you teach. And they think because I can afford the monthly payment that they can afford it, when really they're getting taken to the bank and they're going to lose everything they have because they're paying interest to everybody instead of receiving interest payments or receiving dividend payments or having asset appreciation, right? But a monthly payment with the PMI at 6.2%. It's 3,000 and change a month, times 360 payments is 1,000, 1,900, $1,099,800. Total interest paid 1 million. Uh, total interest paid is total life of the loan is $1 million. Total interest paid is 500, is a half $1 million. That doesn't make any sense. Total paid over the life of the loan is over $1 million on a $500,000 house. So your interest was 5 million or 500,999. $599,800 is the interest you paid over the life of the loan, right? So you paid over almost six, just a fraction under $600,000 in interest. Now let's look at a 50-year loan. You're already getting shafted and heisted on a 30-year mortgage, but let's see a 50-year mortgage, right? Your monthly payment is $3,318. Look at the life of the loan. A 30-year mortgage on a $500,000, you've paid $1.1 million total. Look at the 50-year mortgage. You've paid $1.9 million. So by adding an extra 20 years, because a house you couldn't afford, because the government only wants asset inflation and they want to make monthly payments cheap with a financially illiterate country, you're paying an extra $800,000 in interest for those extra 20 years and a total interest paid of $1.4 million for a house that if you bought when you were 20, now you're 70 on a 50-year mortgage and never made an extra payment, you're paying $1.4 million in interest on a $500,000 house. You're paying three times the house that you bought in interest. That's how the middle class and the poor and the average worker and the average person in the country get screwed because they're paying all their extra money that they could be using to invest and interest to the bank, and then the bank can reinvest that money. So that's your little financial education for today from old Vincenzo to becoming an asset millionaire. If that gave you any advice or any education that you didn't know or thought about or even think about before, think of becoming or a member of Jabroni Killers. That's the easiest way to help support the channel. If you get any education or information or insight or entertainment out of this channel to help us build, to keep the lights on, and to keep this moving. Peace and love. It starts at $3.99 a month. The Rock's Eyebrow. Jay.